Our structure and supply chains are changing significantly. We're having structural issues. We're in this structural inflation that it's going to be permanent. All of a sudden, my predictions, I don't know how to predict. I don't know what tools to use anymore.
What are the factors that play into why inflation is good and how to think about it?
Ultimately, inflation is an increase in price in a society. And a large portion of that is driven by the increased amount of capital available in a specific society. And it also plays out, not only that, against supply and demand, right? So the more supply in the market, then and the demand stays the same, then ultimately the price drops, and vice versa, right? The more demand, the less supply, the prices rise significantly, and that then is accounted as inflation. Yeah, and from an economic standpoint, that's simple terms of where we're at. Why is a standard amount of inflation good? I think it just shows that the demand is growing and exceeds the actual supply, which means that the wealth in a society is actually growing. People feel that there's more money out there. People want to buy. So the demand is always slightly stronger than the supply. That's what you ideally want, because that means that we can produce more. The economy's healthy. There is always demand there for what we produce. We can still innovate. And there is, again, more demand to be able to meet that new market fit with a new product, with new pricing. Or it puts pressure to optimize from a manufacturing standpoint. How do I deliver more product to market? So I can hire more people to help with the factories, et cetera, to produce more goods, to then have those delivered and put into the shelves or into warehouses where people can then go and purchase that. That is the inherent fact. I think what we're seeing right now, we've lived in the last 30, 40 years in a very expansive mode where we've gone global. We've built this global supply chain. And what that has done, it has allowed us to capitalize on benefits of lower cost of manufacturing in one market, whereas also exporting into other markets. So I have grander economies of scale, bringing down the unit costs of items that get produced. And we've been living in that market for the last sort of 30, 40 years, if you will, a World Trade Organization, on all of these bilateral agreements and the NAFTA, we had the European Union, all of a sudden one single market. And so you've been able, as a builder, as an enterprise, scale up and provide benefit of economies of scale. So whatever you R&D, I can scale that around the world. I've got a big customer base. I can bring down the unit cost significantly. This is changing. We're de-globalizing, right? And what does that mean? That means our structure and supply chains are changing significantly. I can no longer very quickly and easily produce something in China, have it shipped to the US and put on the shelves just in time for Christmas holidays where people can then purchase the products off the shelves. Those days are over. We're having structural issues. I cannot get enough energy in Europe in order to prepare for the winter. So the price of utility costs are skyrocketing 80% in the last year. And that does not include the previous year because the lack of demand as well. So all of inflation always gets compounded as well, by the way. And so I think that we're in this structural inflation that it's going to be permanent, but not because of the demand side, but because the struggles that we have in the supply side.
Do you see us getting close to higher levels of inflation and coming out of it? Do you see this like possibly getting severely worse?
My view is I don't think it's worse. I think worse is when I cannot predict it. And I cannot make plans according to how it's going. If we live in an 8% inflation for the next two years, I don't think that's too bad, as long as it stays within an 8% range. And I can deal with that, right? If it goes down to 2%, then it goes up to 8%, then I don't know how to deal with it. Why is that happening? And we had all of this happen so quickly because of the COVID shutdown and then the reopen and everything come online. We had the Ukraine war. We had Russia sanctions. We had the China issues. All of this compounded has just created huge uncertainty that has driven that whole whack-a-mole that I cannot predict anymore. I don't know what metrics to use. And then the cost of capital changing all of a sudden. So all of a sudden my predictions, I don't know how to predict. I don't know what tools to use anymore. So the world has to come and identify what are the new tools that I need today in order to calculate what inflation could look like and what impact that will have on an economy and to the cost of capital. And based on those tools that are provided, that are modern tools, hopefully we will get to a better predictability, which allows people to make better decisions, do investments accordingly, and improve the asset allocation that they need to in order to hit returns. I think we're on a journey down that path. So 8%, if we can hold it at 8% for a period of time, I don't think that is too bad.